We start, though, with that big economic news of the day, and President Trump once again calling for interest rate cuts after the release of the latest consumer price numbers. According to new data from the Bureau of Labor Statistics, inflation ticked up 0.2% in July. On a year-to-year basis, prices are up 2.7%, which is above the Federal Reserve's 2% inflation goal, but still slightly below predictions from economists. President Trump weighed in on this on Truth Social after the release, saying in part, quote, Jerome Too Late Powell must now lower the rate. And he continued saying the damage he has done by always being too late is incalculable. Fortunately, the economy is so good that we've blown through Powell and the complacent board. Now, that follows the president announcing he is nominating E.J. Antoni to take the reins at the Bureau of Labor Statistics. Antoni serves as a fellow at the Heritage Foundation think tank, which wrote the conservative Project 2025 plan. The Senate will have to confirm him, though, before he can take his post. For more on this, let's bring in CBS News White House reporter Aaron Navarro and CBS News Money Watch correspondent Kelly O'Grady. Kelly joins us from the New York Stock Exchange, so let's start there. And Kelly, this was a mixed bag overall. What do these latest numbers show in terms of what everyday consumers are paying more for?
I think the biggest takeaway, Nancy, is that this is lighter than expected. The inflation rate was expected to tick up even more. Now, you mentioned we are not at the Fed's 2% target, but that overall 2.7% annual headline inflation number, it's the same as the previous report. So that's why investors are celebrating. They don't want to see that go higher. One of the main reasons we didn't see it go higher is because energy prices have actually come down. And that is a theme that we have seen months and months this year. Now, you peel back the onion, there are a couple of areas where you can see the impact of tariffs, like furniture prices, as well as footwear, and some of those other categories where you import items from overseas and that they would be subject to a tariff. That being said, economists are still pointing to the next few months where we do know that higher tariff rates kicked in last week, and we would expect them to flow through that inflation rate over the next few months. But broadly speaking, this is definitely better than expected, and that's why you're seeing Wall Street celebrate today.
And Kelly, we know all too well how insistent the president has been for interest rates to be lowered. Could these figures be the catalyst for a change?
This is really interesting, Nancy. I've been talking to a lot of investors about this today because that's part of the reason why investors are celebrating, because market loves rate cuts. Market loves cheaper money when that borrowing rate comes down. It's not so much that these numbers call for a rate cut. It's that the labor report that we got a couple weeks ago was weaker than expected, really is inspiring concern that the labor market is not as healthy as people once thought. And so the fact that we didn't see a huge increase on the inflation number is making the case that maybe the Federal Reserve come September will say, all right, we're going to do a rate cut. But I will note, Nancy, we're going to get another labor report and another inflation report before that decision comes.
Yeah, and speaking of that labor report, Kelly, as we mentioned, the president has nominated his pick to lead the Bureau of Labor Statistics. What more can you tell us about Antoni? And if confirmed, what is he expected to do at his new post?
So he is an economist for a group called the Heritage Foundation. And even before his appointment, or nomination, I should say, he has criticized the BLS and the collection of data going back to COVID. And this is something that you've heard from the president. You've heard from a lot of economists that the methods are antiquated and that we need better data. So to that point, we haven't heard from Antoni since he has been nominated, but you would expect him to really dig into that collection and how you can improve data, which, Nancy, better data, you'll always hear me say, that's good news.
We'll stick with that. Kelly O'Grady, thank you very much. Always good to see you. And let's bring in our Aaron Navarro from the White House with more on this. Aaron, in addition to those inflation numbers, the president also posted about tariffs today. So what is the White House's latest assessment of the economy?
Yeah, Nancy, good to be with you. You saw White House Press Secretary Caroline Leavitt in the last hour frame this report as showing that the inflation rate is beating market expectations by remaining stable, touting the prices in particular for energy falling over the last year, while at the same time saying that this administration is improving upon the economic situation that was handed to them by President Biden's administration. You also saw in that post of President Trump from earlier, you saw President Trump say that he was going to sue the Federal Reserve Chair Jerome Powell over the multi-billion-dollar renovations for the Federal Reserve headquarters in Washington, D.C. You can recall President Trump was there in that headquarters touring it with him. Asked about that, though, Press Secretary Caroline Leavitt did not say if this was something that was actually going to happen, just said that it is a possibility.
And speaking of tariffs specifically on China, yesterday the president signed an executive order delaying tariffs on Chinese goods for at least 90 days. So what kind of progress has been made in negotiations with China, and what kind of leverage does the United States, does the administration believe it has over China in order to get a deal done by this new deadline of November 10th?
Well, we've continually heard cautious optimism from economic officials at the White House, but nothing concrete in terms of progress in those talks. Trade Ambassador Jameson Greer has talked about how rare earth minerals and magnets, which are needed for laptops and smartphones, remains a sticking point, remains something that U.S. and China trade officials continue to talk about. You've also seen President Trump voice some frustrations with China, saying on Sunday that China should quadruple their imports of U.S. soybeans. But one other reason potentially for this extension is that neither the U.S. nor China wants to see those tariffs go as high as 80 or above 100%, which they could snap back to were it not the extension of this deadline. Both sides have acknowledged that could really disrupt the supply chain. So more so than leverage that they can act on, this extension just seems to be a time to give both sides more time to reach a final trade agreement.
And Aaron, finally, before we let you go, President Trump is set to meet with Vladimir Putin in Anchorage, Alaska on Friday. And he's saying that there may need to be a land swap in order to get a ceasefire achieved. However, Ukrainian President Zelensky is saying that is not in the cards and that Russia, in fact, appears to be mounting a new offensive on his country. So how is the White House navigating this ahead of the peace talks on Friday?
Yeah, I thought it was notable how the press secretary, Caroline Leavitt, talked about how any big agreement would have to come during a trilateral meeting. But at the same time, she said that this meeting on Friday will just be between President Trump and Russian President Putin, signaling that there could be something in the works down the line. But in terms of some big breakthrough this Friday, the White House is clearly putting expectations or lowering them going into that trip to Alaska. You also saw Press Secretary Caroline Leavitt frame this meeting as a, quote, listening exercise for President Trump to get a firm understanding of what Russian President Putin wants, something that Trump has said he can get within 2 minutes of talking to Putin in person.
A very important 2 minutes then. Aaron Navarro, thank you very much.